Hello and welcome to another video of Eternal Gains. This is the channel where I show you how to grow your stack in the most sustainable and most safe way. Today, I want to show you another flywheel strategy. This is pretty time-sensitive information, so make sure to subscribe and hit the bell and notification icon so you are one of the first to receive this info. What is the plan? Now, the plan is, first of all, to use a strategy which utilizes stablecoins. Why stablecoins? Because, as I already said in my last video, in the current market situation, it is a good idea to convert at least a portion of your portfolio into stablecoins so that if the market breaks down, you still have some dry powder, right? Because you want to have some dry powder when the market goes down, so you can nicely buy cheap projects, okay? Now for this flywheel strategy, we're going to utilize our capital in the most efficient way, and we're going to use a little bit of leverage as well. The first step, what we want to do is come over here to Ola Finance, okay? I already featured this one in another video. And again, this page is just brilliant, okay? We are here on the Phantom network, by the way. As I explained already, you get paid to borrow, to supply collateral, and you get paid to borrow for certain coins, all of the ones which are green, okay? So what we would do in this case, for our strategy today, we would use a stable coin, okay? We definitely need a stable coin. We don't want anything volatile, because then it can happen that we get liquidated. That's obviously the last thing what we want. So in this case, we could choose between USDC, Frapped USDT, Frax, and Magic Internet Money, MIM. So we simply check which one gives us the best APY right now. This one gives 5, 6, and 2.3. Okay, to be honest with you guys, Frapped USDT, I never really used this stable coin, so I personally would stay away from it until I did some research on it. So in this case, number 2 is USDC, and USDC, I think most of you guys have heard about. So the first step is you have to supply some USDC right here, okay? You approve it. After that, you can supply your USDC, and then you have to switch on this little one, which enables your USDC as collateral, so you can borrow against it. When you have done that, then you come over here to the borrower's side, borrow markets, and we want to borrow also a stable coin, okay? By doing that, this is pretty much the lowest risk strategy what you can choose, okay? Because those two shouldn't fluctuate in value against each other too much, which means we don't have to worry about liquidation here, okay? What I just noticed is, they give you right now 10%, 10.9% to borrow Ethereum. This is a hell of a deal right there, right? And you see it's also quite popular because right now there's only 0.66 million available, okay? Now, for our strategy, I think I would go with MIM, okay? MIM gives us 8% right now. So if we borrow MIM, we get 8%. As I said before, the only thing what we have to keep an eye on is the changing of these numbers, because this can change, pretty much by the hour, right? So just keep an eye on those, maybe check it, at least once a day to make sure that this number is still positive. But even if the number is negative, but is smaller than, so let's say this is negative 2% and this is still plus 3%, then it doesn't really matter, because then we are still overall positive, okay? Just make sure that you get more on this side then you would have to pay on this side in case it goes negative. Okay, so this is step one. You supply the collateral, in this case USDC. You borrow the other stable coin against it. So you already have 5 plus 8 is 13 plus here. So it's around 14% what we get only to borrow and supply the coins. Now, what you're going to do with this borrowed MIM? Because of course, we don't want to only have this laying around in our wallets, correct? The next step, what you would do is you would come over here and you would use your stablecoin now. In this way, we said we would borrow MIM to buy BOO. Okay, what is BOO? BOO is basically the governance token of SpookySwap. Now, here you have basically two options, because one option is you just take this 14%, right, and you chill. Okay, this is one option. But I would recommend to take it one step further. We have SpookySwap right here, and we can buy BOO. BOO is the governance token of SpookySwap, and it is a little bit volatile, right? But if the market goes back up, what I expect, then certainly this token will do some pretty nice gains, because FTM and most of the coins are linked to Bitcoin and Ethereum value-wise, which means when Bitcoin goes down significantly, then everything else is following it, and the other way around. Okay, and that's why we always use the Bitcoin price basically for an indicator to see the overall market direction. Either way, what I would do is I would now take the borrowed MIM, buy BOO for it, okay? And then what we're going to do is we're going to stake our BOO, okay? There are two ways now. One is Grim Finance, sorry. And Grim Finance right now gives us 172.42% APY, which is really, really nice. 0.27% daily, which is also pretty juicy. This is one way. The other way is you could come here to SpookySwap, come over here to stake BOO. Then you can stake your BOO here for X BOO. Okay, stake BOO here and receive X BOO as receipt, representing your share of the pool. The pool automatically compounds by using the portion of all the trade fees to buy back BOO, which means the X BOO to BOO ratio will grow over time. Okay. Like liquidity providing, you will earn fees according to your share in the pool, and your X BOO receipt is needed as proof when claiming the rewards. So this is already pretty nice. So we have a compounding effect in here. That's always what we are looking for. And we get some platform shares. Now we can take this X BOO and stake it one more time. And they're offering this pools right here, staking pools. So you can basically earn one of those tokens, whatever you want, okay? And basically by staking your X BOO, you receive an additional token reward, whatever token you wish to earn from this list right here, okay? Then we have another option right here. Is a little bit different. So what you would do here is basically you buy your BOO and you stake your BOO for X BOO, right? And then you get 48.61% on that, and you get another 72% on this, right? So we're looking at 130% approximately right there. The difference here is that you provide your BOO, okay? And then they automatically convert your BOO into this X BOO. So basically the same step what would happen on this side right here. But with the difference that the rewards from this X BOO protocol once per day is basically converted back into BOO, okay? So basically here you earn BOO and whatever token you want. In this case, it's all consolidated into BOO, okay? All rewards are compounded into BOO. Now, this depends a little bit on your personal preference. Do you want basically to choose your token right here? Okay. Or do you want everything to be back in Boo? Don't forget that this XBoo already itself is compounding, and then basically the rewards are compounded into more Boo, which is, yeah, depends on your preference. The APY here is a little bit higher than what you could achieve over here, but it depends on your preference. And now we basically went full circle. So we came over here, we got our 14% on supply and borrow, and then you get another 172% on top of that, right, for staking your Boo token, which is pretty sweet, I would say. And especially the bear market, this sort of strategy is what you want to look for. Because especially here, we're running a low risk. We are not subject to liquidation because we are only in stable coins in this case. The only risk basically here is that Boo loses a lot of value, meaning you are not able to pay back your loan. So you lose more than what you borrowed, right? I think this could happen in the short term, but don't forget you compound your holdings, right? Which is pretty nice in the bear market. And since you are not really in a rush to pay back this loan, you are basically, you can just sit back, relax, because, every bear market is followed by a bull market. I think this is one of the rules or one of the ground truths about pretty much, most of the markets. They come up, they come down, and they come up again, right? So with this strategy, you can just park a portion of your capital in here. As I said, maybe from time to time you will have to shift if it's really necessary. Again, if this is just slightly negative, then I would not worry about it. And even if it's a little bit more negative than this, but your APYs over here still outweigh what you pay for your loan. You can do the simple math, right? It's a simple addition right here. And if the overall APY is still pleasing, then by all means, go for it. Okay, guys, I hope I could bring you this flywheel strategy a bit closer. I hope I could, bring you the whole farming idea a little bit closer. I would really be happy if you could make 50 likes on this video, share it with your friends, leave me some comments if something is not clear, or if you just, want to know something or whatever. And see you guys in the next one.